All right, we are live. Just giving let's give a couple of minutes so that people could start coming in. But we have Jocelyn from Home First Lending.
Yay! Thanks
Yes,
for having me.
yes. So she is going to be answering the questions that you guys have about loans and financing. And then I know that some people did comment on the post that I put in YouTube to see what questions you have. So I already gave her those questions. You guys know that I got you. Let me make sure I don't have anything in Instagram. Okay. All right. Let's just let a little people, it's a few more minutes. But Jocelyn, thank you so much for coming on the live so that we can educate my family, my YouTube fam. I'm here.
Yeah,
Hey.
I'm excited to be here.
Yes. Are you able to see the comments or no?
I don't think so. Oh, wait, maybe if I move over here, yes, I
Okay.
can.
Perfect. Okay. So yeah, Jocelyn is very great at what she does. Very, very, very knowledgeable. So Jocelyn, just give like everybody just a little bit of background for you.
Yeah, definitely. So I'm originally born and raised in Philadelphia. So made my way down south. I made a stop in North Carolina for university, and now ended up down here in Florida. I absolutely love it. I was working for the Magic for a little while. I was a sales rep for the guys that own Home First, and then they recruited me over to come work for them. So I've been doing this now for four. I'll be this year will be 4 years.
Wow.
Yeah, longer. It doesn't feel like that, but here we are. It's crazy.
Mm-hmm.
So
But
I did start out.
you're a big Eagles fan, right?
Oh yeah, diehard Eagles fan. Oh yeah, go Birds.
Do we have any, hey Fred, do we have any other Eagle fans here? Put it in the
Yeah,
comments.
if I get some Birds fans in here, let's hear it. And football season started on Friday, so it's like it's a good time of year already. It's again. I just love football season.
Yes, I absolutely love that. So, what do you enjoy about being on this side of things?
Yeah, I mean, I think for me, it's just a matter of like finding solutions. I really love, like, I think some people think buying a home is hard, right? And it's not. I think it just comes down to working with somebody that knows what they're doing or somebody that's able to find solutions, right? And so I just love, working with people, making that dream come true. Homeownership is one a huge accomplishment, right? So we should all be proud of it, I think. And it's something that a lot of people, don't think that they can do when in reality they can, right? Because it's not hard. So for me, I absolutely love just, seeing people's reactions to finding out, oh my God, I can afford that, or, I qualify, and then just working with people to get them there to the closing table and then just having that accomplishment, being a part of it. It is a big deal, I think, personally. And so I just think the joy of homeownership and then being a part of the journey for so many different people and scenarios and finding ways. It's been very rewarding. It's a rewarding career.
That's awesome. Yeah, absolutely. And I always tell my clients like I in my opinion from what I've been in the industry for 5 years now, and I really like a lender can make or break a deal. Like
It's
for real,
true.
for real. And and I know sometimes that there's people like there's other companies they're like, "Oh, we can my Steelers lost," somebody said.
Yeah, I see that. It's
You know,
preseason. You don't got to worry about it.
but it's like some like there will be mortgage companies who advertise and all this other stuff, and oh, we'll save you money here and there, and but sometimes those be the worst that is just like, wait, what?
Right. It's almost like one of those things where it's like you get what you pay for, right? When something is too good to be true, it's too good to be true. If somebody tells you no and somebody else tells you yes, like I would say you got to dig a little bit deeper and find out. There's a lot of times that we do come in and rescue a deal, right? Somebody's with somebody else. Lenders are different, right? Not all lenders are the same. And so ultimately, maybe the lender that we're working with doesn't have the solution that we're able to provide because as brokers, we have a lot more opportunity than if you're working with a bank, right? For example. So It is. It's really important to all pieces of the process, right? Are so important when it comes to home buying because your lender's important to get the loan, but your inspector is important in knowing what the house's bones are, right? Your realtor's important in the good negotiations and representing you and listening to what you want to get out of what you're trying to do, right? So there's so many important parts, and there are a ton of pieces in the home buying process.
I agree. I agree. So, if you guys have questions, definitely put it in the comments so that we could have Jocelyn answer them to her best ability. So, I know we did have one question. Someone asked, "What is the longest mortgage?" They heard that it could be 40
Yeah.
years.
So there's a 40-year mortgage out there, right? The only difference is that there are what we call qualified mortgages and then non-traditional non-qualified mortgages, okay? So a 30-year loan is the furthest that the government's going to back, okay? So that means that Fannie Mae and Freddie Mac are the ones that back the loans. So that would be like, think of traditional loans. That would be what we think of as the four traditionals: conventional, FHA, USDA, VA, right? Those are all government sponsored, and they have to follow the rules and the laws of what the government says. The government says there's only 30 years to a mortgage maximum, okay? So conventional, FHA, USDA, VA, yes, those are 30-year loans, and there is no 40-year option. However, when you start working with other companies as a broker, like I am, where I work with more than just the traditional loans, I also work with non-traditional loan options. This is where when somebody maybe doesn't qualify to purchase a home the traditional way, right? They don't make the cut for that FHA loan, but maybe they can go with a non-traditional loan option and qualify that way. There are 40-year loans available. So it is something that you can help you qualify for more, right? But the only twist to those loan programs is that they're not as um I guess I'll call them pretty. Let's call them pretty. They're not as pretty as your traditional ones, right? Your conventional loans and your FHA, VA, USDA. That's the way that that's the traditional way of qualifying. So the terms are going to be the best options. Whereas if we want to go for that 40-year option loan, we can do it. Some of the different things about them is that it starts at 10% down, right? Whereas we know if you go FHA or if you go conventional, you're looking anywhere from 3 to 5% down. So your down payment and your commitment into that loan is a little higher than when you get away from the non-traditionals and into these other ones. But yeah, there's 40 years out there. It exists, and it has opened up opportunity for investment properties. Is a great opportunity to do it because you can do it with what's called those investor cash flow loans. So we're not using any income to qualify. We're just showing that we have the assets to do it. On a 40-year, now your monthly payment is a lot less. So now your rental income is making you more money. So a lot of investors look at doing those 40-year loan options.
Okay, perfect. And then they asked, did forbearances during the pandemic put that money on the back end for some mortgages, making them longer? So no, because it wouldn't. So it depends, right? If it was a investment loan or one backed by Fannie Mae and Freddie Mac, right?
Yeah, so what they're talking about is actually the forbearances. Like if during COVID, if you were going through a hardship, you
Oh,
were
okay,
able to ask your
that's
lender, can I not pay on my mortgage because maybe you lost your job or you were sick, right? And so when you go through the hardships and you apply for a forbearance, basically what the lender does is they say, yes, you can. When you're not paying on your mortgage, though, that money is going in, like how, let's say that you took 1 year off from paying your mortgage and put it into a forbearance. That 1 year is going to be what you owed in principal and interest, and then they tack it on as a second lien. So a lot of them you're not paying on it. However, it does have a balloon payment. So what that means is that the loan didn't become longer. Let's say that you right now today had a 30-year mortgage, and you after 5 years you said I need a forbearance for 1 year. So now you're at 6 years into your mortgage, right? You still have to pay that first lien back in the 30 years. And then at the end, when you hit that 30 years, the second one is due in full. That forbearance is due in full. So a way to get out of the forbearance is to just do a refinance. You would refinance your loan, wrap in the second lien into the first one. So now you smush it together into one again. And then you would have the 30 years to pay it off again.
okay. Okay. How big of an interest rate drop should you wait to refinance?
That's a good question. And it kind of depends. Because right now, obviously, that's the talk of the town, right? We're waiting on interest rates to drop. The Fed should be dropping interest rates. And so when they drop, though, we're not gonna, it took over 2 years to get to 8%. We went from in the one, twos, and threes to being in the seven, eights, and sometimes even nines, right? That's what happened in 2.5 years. Now it's going to take us another 2.5 years to get down. When we get down to what will be a normal, healthy market, we shouldn't be anticipating one, twos, and threes. That's not normal. That's not healthy. And that's not what the world was like pre-COVID, right? That was a COVID pandemic. If interest rates are the one, twos, and threes, then we probably have a world war or something crazy going on. But if you like look at the world history and let's go back to pre-COVID, the market was really healthy and the world was in a really good spot. And interest rates then were in the high threes, fours, and fives. And that was normal. That was a really good time to buy homes. House prices were fair. Affordability existed. Now affordability is hard because of interest rates being so high. So now as we start to come down, that's a really good question. When is the right time to refinance? And ultimately, it kind of comes down to where you at personally. We always say, or a rule of thumb is a 1% drop can be justified and at any point to refinance. Okay. So if you're sitting at a 7% interest rate and interest rates are getting now closer to sixes and fives, okay, maybe it could make sense to get that first round of financial relief that you're looking for. But if you do refinance when it's still in the fives and sixes, you likely will have to refinance a second time because we could get back down into the fours. So you almost, if you can sit tight because financially it makes sense for you to wait until we get to that healthy spot to only refinance once, then you should wait. But if you're in a predicament right now where, the world is expensive and you really are looking for financial relief, a 1% drop is justifiable because it saves you hundreds of dollars a month.
Got it. Okay. That was actually a really good question.
Yeah, definitely.
Okay. So, how much do I have to make at my job to be able to afford a house? Example, a couple brings in total $85,000 per year. How much house could they qualify for? How is the bond finance? That is a new thing for out of staters. Hold on, I'm trying to portfolio loan was used by Okay, a portfolio loan was used by the man who bought my property because my off-grid cabin would not qualify for any traditional loan. What is the benefit of so the let's do the next question. A couple brings in totaling 85,000 per year. How much house could they qualify for?
Sure. There's a really easy way to do the math on this. And when we speak to someone over the phone, there's two different ways that you can like qualify for a home. There's a pre-qualification and then there's a pre-approval, right? Pre-qualification means I talked to you, I figured out your income, your asset, and your credits, and it makes sense for you to move forward with an application, but we can roughly say how much home you could qualify for and what a monthly payment looks like, right? That's a pre-qual. But when you place an offer, a pre-qualification is not the same as a pre-approval. This means that we've collected your documents, we verified it, and we ran automated underwriting and we have approval. So now you can move forward with your offer and getting a loan. Okay. So there is two differences there. Now, if you're somebody that wants to talk to like a lender and you were to say, I want to get pre-qualified, this is a great example of it. So they make 85,000. So you can use 50% of your income towards your future mortgage payment minus your liabilities though. So that's where it gets a little juicy. So let's start with the first part of the question, which is I make 85,000. $85,000 a year is equal to $7,083 a month in monthly income. But only half of your monthly income can be used towards that future mortgage payment. So you take 85,000, you divide it by 12 to get your monthly income. And now we can only use half of that to figure out how much mortgage we can afford. So let's divide that $7,083 by 2, which leaves us with $3,541. So you could potentially afford a mortgage that would get you a mortgage of $3,541. However, now it gets to the next layer of gritty. We need to take out your liabilities because only half of your income can go towards what's on your credit report and that mortgage payment. So we take your 85,000, break it out into a monthly income. We break your monthly income in half because half of your income can go to paying all the other bills. The other half has to go towards what we see on your credit report and your mortgage. So out of the 3541, let's say, for example, you have a $400 car payment, right? So now you go from qualifying for a 3541 mortgage to now only minus $400 car payment. Now you get a $3,141 mortgage. Then let's say that you've got student loans and you pay $100 a month in student loans. Now you can afford a 3,041 mortgage. And so ultimately, that's how you calculate it and figure it out. What is on your credit report and your minimum monthly payment? We don't care how much outstanding debt you have on your credit report. What we care about is what is that minimum monthly obligation that you must pay in order to pay off those creditors, right? So we take our income, divide it by half, take out the liabilities, and that's how much home you can afford, essentially.
So now, what are you seeing as far as, okay, how much purchase power is that, a $3,000? And I know there's so many variances, but if
So
they,
many.
I know, if they just like very simple, if they can qualify for a $3,000 loan, what does that purchase price look like?
Sure. So we're just focused here in Florida, right? Because
Yeah,
obviously
Florida.
everything's a little different. Okay. So then I have another screen brought up that I'm kind of looking at right now just to make sure I've got this. So homeowners insurance in Florida, annually, the number that we see down here, let's just say we're looking at a home that's anywhere between 200 and 400,000, right? Homeowners insurance is included in your monthly payment as well as property taxes, right? So in this circumstance, I'm going to use $200 a month as the homeowner's insurance quote. And then Florida, we use 1.2% of your property value. So in that case, if you were to have, let's go with a conventional loan here, we'll do 5% down. How much can you afford, or how much, I guess, would a $3,000 mortgage get you, right? That's what we're looking to do.
Yeah.
Then I would roughly say, let me put another number in here. I would roughly say about 400 to 410 per purchase price would give you a $3,000 mortgage.
Okay. And I kind of want to, I know she had a little bit other questions, but you mentioned student loans. Let's talk about student loans real quick,
Yeah.
right? So a lot of people have their student loans in forbearance, right?
Mm-hmm.
How does that affect when you're trying to get pre-approved for a loan?
Yeah. So the way that they consider student loans and being in forbearance, that's perfectly fine, right? Like you said, a lot of people do it and it's very acceptable. So it's not like you can't purchase a home because my student loans are in forbearance. But what they do tell you is that we know a future payment is coming at some point in your life. So we have to consider this. We still have to consider that it might be zero now, but in the future, it has to be something because you're going to have to pay it back at some point. So what they do is they consider if it's an FHA loan, then we have to take a 0.5% of the outstanding balance, and then we would take that as what your minimum monthly payment would be. So let's say that you have a $10,000 in student loans, right? Let's times that by 0.5%. $50 is what it comes out to. So $50 I have to take out of that monthly income because I have to consider that that would be what your mortgage or what you would be paying for the student loans. Now, if you go conventional, there is a way that you can use 0.5 or you can use 1. So it just kind of depends what your loan is. But anywhere between 0.5% and 1% of whatever your total amount of student loans is, they're going to consider a monthly payment for it. Even if it's in forbearance, it's not forgiven until it's forgiven.
Okay. And would you say sometimes it might be better, like let's say someone is getting like very, very tight on their debt to income ratio, right? And it's like, oh my, if we do 0.5% of the outstanding loan, it's going to take us way out of where we need to be, right? Do you ever recommend or ever see where if they come up with a payment plan with the loan, right? With the loan people,
Yep.
it might be a little bit cheaper. Have you ever
Yep.
seen that?
Yep. I've done it a few times actually. So for somebody that wasn't forbearance, a lot of these student loans are offering income-driven repayment plans, right? So IDRs is what they're called. Income-driven repayment plan says I'm going to call the government or whoever your loan is through, and I'm going to tell them I want to make payments, but I want to know what my minimum monthly payment would have to be. If it's zero, we can't use it. Even if you're on an income-driven repayment plan and they tell you zero is your income, as it is, the lenders do not recognize zero ever. So we have to consider something. If they make it $1, you're good to go. I could use $1.
Really?
So I've had somebody call and they had a very significant amount of student loans, probably like over 200,000. So when I'm hitting you at a 0.5 on a 200,000, it was a lot of money coming out. So we did just that. She called, she said, "Hey, here's my income, whatever, can you tell me what my monthly payment will be?" It ended up being like $300 cheaper per month if she had done the income driven repayment plan versus us having it to hit her for the 0.5%. So we did that and she was able to qualify for the home that she was looking for. So that is a tactic that we can use if someone is in forbearance, or if they have the $0 payment plan, call and get it put to $10 a month, right? And then that would help you with qualifying.
Yep. And this is what I mean by it's very important to who you work with, right? Your real estate agent, your lender, right? Because if you go to just like a box kind of box bank, right, and they're like, nope, if you don't fit within our parameters, that's it, right? And there's some lenders who are not going to go the extra mile and be like, okay, let's see what we could do, let's come up with solutions. And I like what you said in the very beginning, is that's what you love about it, is coming up with solutions to make it work, so that
Yep.
so people can become homeowners.
Yep.
Love that. Love that. So that comes to the next question. What is the benefit of using a broker over going straight to a lender? That's somebody's
Yep.
question.
Yeah, that's a great question, and there is a difference, right? Brokers. So I'm a broker. I work with. I'm licensed, which means I have my individual license, and so I almost like you, Alexis, right? You work, and you hang your license underneath the big umbrella, right? I'm licensed as an individual. I hang my license underneath Home First Lending. Now, Home First Lending is a brokerage that allows me to go out there and find different lenders and different programs so that I can provide more opportunity. So the main difference between a broker and a bank is that I work for you, the buyer, right? I 100% work for you, because if your loan doesn't close, I'm not getting paid, because who I bring your business to, the lender pays me for it. So that's how I get paid. I don't get paid by you as a buyer. You don't have to pay me nothing. But what happens if I take your mortgage to this company, they pay me, right? Then that's how I get paid on closing day. But if we don't close, I don't get paid. Now the banks, that's a salaried employee. They represent the bank. They work for the bank. The bank is who their priority is. So they're going to do whatever is best for the bank, not for you. I'm going to do what's best for you because I represent you. And that's what
Yep.
I'm here for. Also, the bank is given one rate sheet and one rate sheet only. So they say, here, I want, I'm putting FHA loan. I'm going to put down 3.5%. My credit score is 640. And then they're going to come back and say, here's your interest rate. For me, I work with 60 lenders. I can go ahead and put your information into 60 different lenders with one credit pool. And I can look and say, oh, this lender's going to offer you this interest rate. This lender's going to offer you this interest rate. And then I shop to find you the best option. So we have a lot more wiggle room. And we also, the main difference is we have lenders that can do a lot more outside of the box, right? And then we also have, not only do we have the lenders that work outside of the box, but ultimately we work for you. We don't work for the company. And that's the biggest difference.
Love that. Love that. That goes into, that's why I always say in my videos, I tell everybody, you never want to go to a new construction community and just go unrepresented, right? Because the builder's agent works for the builder. So you need
Yep.
that outside representation, because at the end of the day, they're looking out for the builder who's looking out for you, right? You're not
Yep.
saving any type of money. Like, let me tell you a quick story. I went to go show homes today. I normally don't work Sundays, but you guys know that I'm very, if it needs to happen, I'll make it happen. So we
Okay.
went toward this community, and the agent is telling them what their incentives, and I'm like, what else can we get, right? Can we get a washer dryer? Can we get the refrigerator, right? Like, can we price match that other house to this house? And and that's what you need, right? Because you need somebody. You don't need just the average agent Joe Smo, right? You need somebody
No.
who's in and out and who's gonna, who got your back, basically, right? So I
Yep.
love that. Okay, so let's answer some questions here. This is actually a really good question. Pedro said, how is it possible for builders to offer interest rates below the market rate?
Yeah. Okay. Anybody can do that. So it's called interest rate buy downs. It's very simple. Essentially, the builder is taking a chunk of money and telling the lender, okay, so let me rewind a little bit to help explain how interest rates work. When, like I just said, we have a scenario where we have an FHA buyer, and let's just say we look at the factors that we look at to get you an interest rate is, what is your credit score? What's the property type? What's the occupancy type? Primary, second home investment property, right? Then we also look at how much money are you putting down, And then we look at that's the factors that go into it. So then ultimately, then I put in your information, and then the lender comes back and says, here's your options. They don't say here's one interest rate for you. They give me a spreadsheet. Maybe the spreadsheet goes from 5% to 7% interest rates in today's market, right? So the lender likely will say, here's the rate that I'll give you for free. So there's no cost associated to it. Here's your interest rate. And let's just say for this example, it's 6. I can go up to 7% if I want to. And this was really big when COVID was around and interest rates were lower. But if you take an interest rate that's higher, the lender will give you back money. They'll say, okay, if you take a 7%, I'll give you $10,000 back, right? At closing. So that's a tactic that you can use to cover your closing costs. However, in this case, what he wants to know is, how did the lender get that lower interest rate than what's being offered in the market? That's a buy down. So essentially, if 6 is the no cost, 7 gives you $10,000 to get back in credit, or a 5%, maybe you pay $10,000 to get a lower interest rate. So you're paying the lender to give you a lower interest rate. The builders are able to do this because the builders are covering that cost, that expense. They're buying down the interest rate on your behalf.
Yeah. And so would you say at what do they so would you say that the builders kind of buy like bonds so that they are able to go ahead and then lower that interest rate?
It's not bonds, it's cash. It's literally they're taking, if anybody can buy down an interest rate. So if you want to use sellers concessions, right, the money back from the sellers to buy down an interest rate, you can. A builder, it's just wrapped into the cost of the home with a builder. That's how they're doing it, right? So, oh, I'm going to give you $10,000 credit. No, the house is $10,000 overpriced. Okay, so they're wrapping it into the cost of the home, and then ultimately, or you can. If I said I have $10,000, I want that 5% interest rate, you can just buy it down at closing day. You're spending $10,000 to buy down that interest rate.
Got it. Okay. All right. I hope that answered your question, Pedro. Fred said, if you qualify for $300,000 loan, can you purchase a $400,000 home if you put $100,000 down with VA loan?
Yeah. Yeah, that's exactly. So if in this case, I think Fred's saying, hey, I was pre-approved for 300,000 maximum. That's my debt to, well, if it's VA, there is no debt to income ratio qualification. VA is the only one that's a little different. So everybody else is going to qualify. And the maximum amount of home that you can afford is determined by your income. And then your income with your debt to income ratio determines your max buying power, right? So that means this is the maximum amount of home that you can afford. With the VA, it's not like that. The VA, you can go up to 90% debt to income ratio. What the VA cares about is this calculation of residual income. So what that means is after you pay your mortgage, after you pay certain bills that they take into consideration, how much money is left over. That's what the VA requires. So theirs is a little different. So in this case, maybe that maybe it was a friend. Maybe he was pre-approved, and the maximum that the underwriting would let him have was 300, but he wants a $400,000 house. That's exactly how you can achieve it. Just put down that difference in money, and that will qualify you for the 300,000.
But wouldn't you need just a little bit more because you're going to have to cover the closing costs as well?
Yeah, in that case, you would need to have the 300,000 plus closing cost.
Yeah.
Exactly.
Yep. So you would have to have, yes, the $100,000, the difference in the purchase price, but then you also have to think about the closing cost as well, because you're not going to
And
have
you
it down.
should consider 3 to 4% in closing costs is a rough estimate
That's
of the
what I
purchase
tell
price.
them. Yep, that's what I tell them. All right, Maribel, Alexis, we are sitting listening. I love you guys. Thank you. Thank you. All right. Okay, so let's see. Hi, Janine. Pedro said, did the FICO score really affect to get a mortgage? Because when we bought our house in Fort Lauderdale with the FICO over 820, our lender didn't even bother looking at it.
So Pedro, yeah, your credit score is 100%. I call it it's probably one of the biggest factors when it comes to purchasing a home. Your credit score truly does matter. When it comes to why they didn't care is because anybody with 760 plus credit scores, 760 to 850, right? 850 is the maximum. If you're 760 to 850, there is no loan level pricing adjustments. And what that means is that there is no hit to the interest rate. You have perfect credit. So anybody 760 plus, we do have to pull your credit. We're going to look at it. We're going to consider it. but you're not going to have what's called like a loan level pricing adjustment. What that is a hit to the interest rate. So you'd have no effect to your interest rate. And you should be getting the lowest option being available if you're 760 plus.
Wow. Okay, that's awesome. Kiki said, in addition to our regular mortgage payment, can we make principal only payments?
Yeah. Hey, Kiki. Yes, you 100% can. So anytime that you have a monthly payment, it's broken down into what they call PITI. It's principal, interest, taxes, and insurance. And out of those four things, mortgage insurance is also considered in there, but let's stick to the basics here. Principal and interest is obviously the loan amount that you owe times the interest rate. That a chunk is paid. First, you're paying 99% towards interest, and then by year 30, you're paying 99% towards principal. So they're getting their interest up front, and that's how it works. So that's why you never see. If you wonder why doesn't my mortgage payment look like it's never going down, it's because you're paying a lot in interest first. It's not going down. But homeowners insurance and your taxes are going to be 1/12 of whatever your bill is. There's nothing you can do about that. But Kiki, in your case, if you were to say my mortgage payment every month is $2,000, if you were to pay $2,000 or $2,400, that $400 overpayment goes directly towards the principal. So anything that you make over your minimum monthly payment goes directly to principal. You can pay it the day of, right? If your mortgage payment is due on the first of the month and you were to pay a month, your mortgage payment's 2,000, but you pay 2,400, 400 goes directly to the principal. If you pay it, if you want to pay your 2,000 on August 1st, but then you want to on the 15th of every month pay $500 additional, you can. That goes 500 additional directly into the principal. That's a really quick way to make that you pay off your loan faster.
Perfect. Great answer. Okay. So now Bree Johnson said, okay, she gave us a scenario. She said, I work from home. Hold on. Can you please talk? Okay. Talking about relocating when you live in a different city or state. Okay. So
yeah, we see that a lot.
I work from home, so I can work almost anywhere, but my husband would need to transfer. I was told all we need is an offer letter, but when I spoke with the lender, he said we have to transfer and start working at that location. We would have to wait to get 2 pay stubs, which is basically a month before we're able to close and do the process. I just want to know if that's correct. We have been saving, but I'm really nervous on using some of my house money to be able to get an Airbnb for 30 days since we're not located in the area.
Yeah. So actually, I've had to save deals because some lenders do require you to be on the job and have received 2 pay stubs. That is a real thing. This is where brokers are better, right, than the banks because we don't. Our lenders have rules and guidelines in place that say a job offer is good enough. Now, that does come with a little twist, right? So a job offer letter is great. You have to be starting your job within 60 days of closing. So if you were to close today on August 11th, right? Then that means that October 11th needs to be the start date of your job. So you have 60 days to start your job. And the reason why is because when you close on a home, you don't pay a mortgage the month that you close. So no payment in August, no payment in September, but October 1st, your payment's due. They need to make sure that you started your job when your payment's due. But the other piece of it is that if your job offer letter, let's say, is you're closing and you have 60 days until you start, you do have to have reserves then. So what reserves is, it's money that you show the bank that you have. I have 1 month's of reserve means I have 1 mortgage payment. And then if you were to have 2 months reserves, then that means you have 2 mortgage payments in your bank account. You don't spend the money though. You just show the bank that you have these backup funds, right? So when you are having an offer letter and you didn't start the job yet, let's say that your job starts in 30 days. That means that the lender is going to require 1 month's reserve. If your job's starting in 60 days, then you need to have 2 months reserve. So again, you don't spend the money, you just show you have the money. If your job is starting in less than 30 days from the offer letter and when you close, no reserves are needed.
Great information. That's a great question as well.
Yeah, that was a really good one.
And that's why I always say, right, it's kind of like, one lender says one thing, but we go with, you, and you already know because you work with so many different lenders, which have so many different options, right? I love that. I absolutely love that.
Yeah.
So let's talk about how to come up with a down payment, right? Because I think a lot of people don't realize that there are multiple ways to come up with a down payment. Can you tell us some of the ways?
Yeah, definitely. So, a minimum monthly or down payment, I think one of the things that still surprises me actually, I'm very surprised that people think, oh, I can't buy a home because I need 20% down. And that is absolutely not true. But the reason why we believe that is because we used to need 20% in the past, right? So maybe that was something that your grandparents told you because when your grandparents purchased a home, yeah, they probably did have to have 20% down. Then the lenders came out with what you guys know as mortgage insurance. Mortgage insurance allows you to put down less than 20%. It's a monthly payment that you owe to the lender. It's included in your monthly payment. Okay, so it's just a little chunk that you're giving to the lender because you didn't put down 20%. If you put down 20% or more on a conventional loan, you have no mortgage insurance. So what they did was they created these options now where you don't need as much money down. Saving for down payment, I mean, you can be as little as 3% down. That's the loan. If you're VA, USDA, it's zero. But if let's consider conventional and FHA in this case, you do need to have money saved for the down payment.
Mhm.
But it doesn't always have to be your money, right? So I've had people that are using gift funds. Perhaps you have a family member or a close friend, somebody that is able to say, hey, I can help you out here and I can help you get to this down payment that you need. So maybe you have $5,000 needed and you need 7,000 for it. Then maybe you can have a family member, grandma, grandpa, sweep in and give you $2,000 to assist with that down payment. There is down payment assistance programs in the market, right? So qualifying for them, that's going to be the biggest hurdle, right? Every single program is very unique. Every single program has different rules associated to it, right? There's no cookie cutter down payment assistance program out in the market. That would mean that everything is the same, right? Some of them have income limits, some of them, all of them have credit limit or like credit minimums, and some of them you can't make enough, the income limits, you can't make too much money or else you can't qualify for it. And some of them say if you have the money in the bank, you can't utilize the program, right? You have to go out and go ahead and just use the money that you have.
Would
So
you
there
say
is programs.
that's more across the board as far as like if you do have the money in the bank that you can't qualify, or there's still some of the programs who will still maybe allow you to?
Yeah, yeah. There's a lot of the ones. The county programs, right? So if you look at like Orange County, Volusia County, any of those county programs, they're more worried about the income limit. They're not worried about how much money you have in your bank. So you can use both their money. You can borrow the down payment assistance program, right? And then you can also put down your own. And I've seen people do that because they wanted to lower their monthly payment because they wanted to put more money down, right? So there is ways that you can join the two of them together. There's ways that you can stack down payment assistance programs together as well, right? So there's a lot of different programs out there. It just comes down to, I always say, each program is unique in that each program you have to qualify for it with the certain rules associated to it, and every single person's scenario is different. So it all just comes down to, let's look at your file, let's see what's your credit score, what's your income, what are the requirements for the program, can it work for you? And then that's all the things that we are always looking for is, is there an opportunity with a program that's out in the market?
Yeah, and I think a lot of people don't know too that they could, if they have a 401k, right, they could borrow against their 401k for a down payment.
Yeah, a lot of times people are doing that. A lot of times people are doing that. Now, I always the down payment, the 401k, I always tell people, I've got 20,000 in my 401k. Great. The best thing that you can do is if you're somebody that's listening and you're like, hey, I put money in a 401k, maybe I can use that to get into my home, right? I would say that you want to call the 401k company and you want to ask them three questions. One, can I access my money, right? How and how do I get to this money? A lot of them say you have to be under contract to purchase the home, and I need to see your loan estimate. Generally, you need a contract and a loan estimate. Contract you get with Alexis, loan estimate you get from me, right? So that's going to be what you want to do there.
Mm-hmm.
Then you want to ask them, how much money do I have access to? Just because you have 20,000 sitting there doesn't mean they're going to give it all to you, and you usually have to pay taxes on it coming out. So maybe they say, oh, you have 20,000, but you can only get 15 cash because we have to pay the 5,000 in taxes on it, right? Or you have to have at least 5,000 still sitting in the account, so you only have access to 15. And then I would just ask them the third one that's really important is not only how do I get my funds, but how long does it take for me to get my funds? And the reason why is because you're going to be under contract with a closing date for purchasing your home. You need to make sure that you can get the money out in the time that that contract date is within. And that's really important to make sure that you're protected, right? And then we want to make sure you're protected to the contract, but also so that we can make sure we can get the money out for you to close on your contract date.
Got it. Okay, okay. And guys, if you have any other questions, definitely put it in the comments so Jocelyn can go ahead and answer those questions. But I also put, if you're interested in getting qualified for a loan, right, to see where you're at, I always say, right, even in my videos where I do like my Monarch School of Real Estate and I'm breaking down just basic numbers, right, down payment, closing costs, estimated mortgages, but like I always say, I could be off a couple of $100 because everybody's file is different, right? And I
Yep.
always say, the best person to speak to if you want to get some like more accurate numbers pertaining to you individually is going to be a lender, right? So
Yep.
definitely I put the link in the chat so that you can go ahead, click it, and then you would be working directly with Jocelyn so that she can just walk you through it. And I always say, right, and you're a big football fan, right? And
Yep.
it's kind of like, I remember hearing an analogy basically like, you don't get ready at the game, right? You get ready way ahead of time. So if you don't
Yep.
even think that you're able to qualify right now, right, it's definitely worth a conversation because you may be able to qualify, right,
Yep.
because you're not a lender, right? You need to speak to the expert here, right? That's number one. Well, number two, if you're not ready, then Jocelyn could go ahead and come up with a game plan with you and be like,
Yep.
hey, this is what we need to do to get to the end goal, right? And I always encourage that because finding the house is easy. That's the easy
That's
part.
the fun part.
That's the fun part, right? But it's qualifying for that, right? So it's
Yep.
always kind of like, you don't get ready at the game, you get ready way ahead of time. So if we're ready for, game time, we need to do a couple of months ahead of time, right?
I love that. And it's important to have a plan of action too, right? Because it is going to be the largest purchase that you will make in your entire life, right? Home buying is not something that you just wake up one day and say, I'm going to be a homeowner, right? No, you need to come up with a plan on how you're going to make this. And it can change your life. This can be something for you to have, change your life in regards to future wealth, right? Home ownership is such a powerful tool. And just if you don't know, ask. And how would you know unless you go online and you study it, right? Otherwise, just ask the lender the questions and we're able to put you in the best position. I've had people that we've helped them get their credit score in a position where they qualify because we can help get you there, right? Or I've had people that's had some money saved but they needed a little bit more. Okay, then we literally broke down their monthly expenses and said you have to put this amount of money into the savings account every single month, and then we literally touch base every single month, and 6 months later they have the funds for their home purchase and we were able to buy a home, right? So sometimes if you don't know what you don't know, and that's why it is so important. Go ask and we'll help you. That's what we're here for.
Exactly. That's why I always say, and people just need to just stop being in their heads and just take action, right? I always say it. And I always say it in my videos when it comes to the houses, right? If this is going to be your first home, most likely it's not going to be your forever home, right? So
Right.
get in where you're getting a good deal, right? You're getting your closing costs paid, whatever it is. And then little by little, you start upgrading the house if you want to. So if there's carpet everywhere, go ahead, take it off, right? And
Yep.
just little. But just staying stagnant and just kind of like freeze mode, I don't know what to do, and overthinking, and you're paying rent where your money's not going anywhere, right? I always
Nope.
tell stories that I bought in 2020. I bought a 5-bedroom 3-bath. I had carpet everywhere, and y'all know that I have 6 kids and that ain't gonna rock. So I took out the carpet on the first floor and I put the towel, but I couldn't afford to put it on the second floor, right? So little by little I did it, and I bought it my house at 306, and when my community closed, that same floor plan was going for about 445, right?
Yeah.
And
That's a
so
lot of equity.
yes, and that's why I'm saying that's why home ownership has so much benefits towards it, right? Pedro said, even if I have down um Pedro said, even if I have the down payment for a house in Ocala, I'd rather put down my 401k money.
Yeah, and Pedro, that's actually a really smart way of thinking about things. Your second comment in it was because the money in the 401k is basically sleeping, right? When you think about growth of the richest people in the world are all in real estate. I can promise you, real estate is where you get rich. And maybe that's not your goal to get rich in real estate, and that's okay. But you are going to make money when you're sleeping in real estate, because the growth of especially houses in Florida, right? We're the number one state to buy a house in right now. That means that the demand is driving up the value of your house. So you're going to see year over year growth at more than if you had your money sitting in a 401k. Maybe you're making 1% in the 401k. I think growth in Florida is 3% year over year. And what during COVID it was like 11%, right? So it was insane. So ultimately, if you are somebody that's thinking like that mindset, Pedro, you're going to grow a lot more money in taking it out of the 401k and putting it into the house. And that's a good way to think about it, right? Because you do sometimes need to trick your mind and say, I could put this in here and I could actually make more money than if I had kept it over there.
Love that. Rhonda said, thank you. Thanks for all of the great info. Theo said, good information. Anthony said, for some reason, you guys popped up on my feed. Just wanted to stop by and say, keep up the good work and stay motivated. Pedro, Pedro, I'm from Ocala. Oh, okay. So yes, thank you so much. Back to my YouTube search. Take it easy.
See you, Anthony.
Yes. See you, Anthony. Yeah, it definitely, I always tell my people, like, my YouTube, they're my family, right? And
Yeah.
and it's just kind of like, I want to provide as much value. So I wanted to, have you in and just talking about a little bit about the loans, and just letting people know that it is possible, right? There are
Yep.
multiple solutions. And I love that. I love working with a broker, right? Because it's not like you don't fit into this box and that's it, right? Like, you're
Right.
okay, let's see who else can maybe accommodate, right, this file.
Right. Yeah, exactly. And then that's why it is important. The broker part of it is that just that we are giving so much more solutions, or we're giving opportunity where somebody else tells you no. We might be able to say yes, right? Give us a chance. Let's look, let's see, or let's get creative, or let's put you on a plan of action. To me, it's never no, ever. It's never no.
I love that. I love that. I think that is basically it as far as the questions I have. I just want to make sure. Margie said, hello, ladies. My husband and I want a new construction with options to customize. I would have to sell my home in PA. Am I able to go into contract until I sell my home? So it depends. It depends. So some builders require your house. Like, if you have a house to sell, some builders require that house to already be under contract, right? But then there are some builders, because you're building from the ground up, because you want to go ahead and customize, you are able to go ahead and have a contingent to sell that home. So it just depends on the builder. Every builder is different. Okay. So let me see. What's the quickest, like, okay, so if for you guys don't know, I know New York, they take forever to close a loan, like 60 days, right? So Florida, what's the least amount of time you have closed a house on a loan?
Okay, so legally, the law states you're not allowed to close from the day you sign disclosures. You have 7 days until you're legally allowed to close. So if you're financing a home, right, this is not a cash purchase, financing a home, the day you sign disclosures, 7 days is marked. The eighth day, you're able to close. So technically, you can never close faster than 8 days because of that law that's in place. It's a 7 day law, and it exists on no matter what if you have financing. So you can never go faster than 1 week. We have done a week. It's possible, right? You can do it. The only thing is, there's a lot of different things. We ask for 30-day contracts, and there's a reason why we ask for a 30-day contract. It's because there's a lot that goes on in that 30 days of purchasing a home, right? First, you got to get an inspection. You got to make sure, what are the bones of the home? What's going on? What am I getting myself into? Is this the right decision? Or do the sellers need to help us out with something because I want this fixed or whatever it may be, right? So you have your inspection, which is important. You also have an appraisal. This is a third party unrelated to the transaction that says the true value of the home. Just because somebody listed their house for 400,000 doesn't mean it's worth 400,000, right? A professional is going to tell you what it's truly worth. And the lender's only going to lend to you with how much money the house is worth, right? So then ultimately that's where you would have a gray realtor like Alexis to renegotiate. But then the appraisals take anywhere from 7 to 10 days generally in today's market. So that's going to take a week to get an appraisal back. You also have to obtain homeowners insurance. So you're going to go out shopping for quotes. We're going to assist with getting you quotes, but you're going to have homeowners insurance. And then once your file goes into underwriting, this is where the lender's reviewing it and coming up with whether, how they're going to approve your loan. They ask for additional documents. They're called conditions. It's very common. It's not a bad thing. It's not a scary thing. Everybody gets conditions, right? But to clear them out, some of them can be maybe a document you need to go obtain and it takes 2 days to get it. Sometimes you log into your bank account and print off what we needed and that's it. So it can be very easy. So I would say traditionally we ask for a 30-day contract. However, we should be able to get you to clear to close closer to about 20 to 25 days, right? So we want that clear to close and we're working towards getting it as fast as possible. One of the things that you can do to speed up your turn time, like let's say, Alexis, you're like, hey, I have a competitive offer. We really need to get this closed in 20 days. Can we make it happen? Then yes, like we will all as a team decide. You can pay to rush your appraisal. You can pay to get an inspection done faster, and you can pretty much get so that you can get that dream house and get it done. Yes, we can make exceptions to go faster. One way that you can also make things go faster is if you're purchasing a primary residence. If you put down 20% or more, there's a chance you get an appraisal waiver. That means that the lender doesn't even need to know what the appraised value is. They accept it for what the contract is. And so if you can waive your appraisal, you should take it and run with it, because those are the unicorn and the golden nugget in home buying, right? But the only way you can get an appraisal waiver is if you are buying a primary residence and you are putting down 20% or more. There's a possibility of getting an appraisal waiver, and that always helps.
Yeah. So I also wanted to just kind of, if you can let people know, like, what else is, like, what is needed, what documentation is needed for you guys to verify their whole file, like for a W-2 and a 1099, right? Because they're two different things.
Yep. So we'll start with W-2 because they're a little bit easier. So you always have to have two forms of identification when it comes to purchasing a home. We generally think of them as your social security card and your driver's license, right? Those are the two most common that we're using. If you don't have your social security card, don't freak out. We have a form that you can sign in place of it, right? People are always like, I can't buy my social security card. That's fine. Passport works as the second form of ID in that case, okay? So two forms of identification is always what is needed. Then we also have to have 2 months of bank statements. So whatever account you're using the funds for from the purchase or for the purchase, we need 2 months of bank statements that they're going to review. For qualifying for your income, they're going to look at your most recent 30 days of pay stubs, and they're also going to need 2 years of W-2s. You don't have to be on the same job to qualify for a home for 2 years. All that we need is a 2-year working history, right? So you can't be 16 in high school and purchase a home. You don't have a 2-year working history. But if you get out of high school and you have a job for 2 years and you want to qualify, then you can. But your current job is what we're using to qualify you with. The 2-year working history is just so that you have the 2 years of working history. So 2 years of W-2s for any employer that you worked with. Most recent 30 days of pay stubs is what determines what your income is. And then the final piece of actually, that's all you need is driver's license, social security, bank statements, pay stubs, W-2s. So that's 5 necessities.
That's for if you have a W-2.
Correct. Yep. Now, if you are 1099 or if you own your own business, right, that means you can be 1120S, 1065. So you have business tax returns and or you're 1099, you're self-employed. 1099 is someone who's a sole proprietor, versus if you have the other taxes and you own your business and your business is claiming the income. You do have to be in business for 2 years, and it does need to be the same business. Okay. So you can't have had 1 year or 2 years of W-2. I just started my business and I'm ready to qualify. That doesn't work. 2 years, your business has to be up and running, and you have to have 2 years of tax returns. If you've been in business for 5 years or more, you only need to use 1 year of tax returns. So that makes a big difference when it comes to averaging your income over 2 years versus maybe you've made a lot more the most recent year and we can use 1 year. But basically what we're doing in that case is we're looking at 2 years of business and or personal tax returns. Same thing, driver's license, social security card, and bank statements.
Okay, perfect. And I wanted to, touch on the appraisal too, right? Because sometimes there's builders who are like, the price is what the price is, right? Especially the smaller builders in Ocala, right? So Jocelyn and I are actually going to be doing a deal together that we should be going under contract today or tomorrow, right? And yay! So what I want, and this is very important to know, I'm telling you, this is very important to make sure you who you work with is very important. Okay, so let me give you kind of some background. So this builder, he was like, the price is what it is, right? And at right now, the house is not going to be ready till November, right? So the houses that are far along, that are not that far along and not closing within the 30 days, there's not a lot of incentives, right? Because it's like, I don't really need to sell this house right now because it's not completed. Okay,
Okay.
so I don't really have a lot of overhead when it comes to the head. I don't have to pay electricity and all this other stuff, right?
Yeah.
So my clients needed a closing cost assistance, because we're like, in order to make this work, we need some closing costs, right? So because they were not offering any incentives, and they were strong on the purchase price, and my clients so this is when it comes down to, like, if you really want this house, then we're gonna make it happen, right? It might not be the most, like, oh, I didn't get a deal, but you kind of still did, right? So anyways, so we offered $10,000 above what they were asking for, right? So the house was listed at 300,000. We offered 310,000, and those $10,000 are going to be credited towards closing costs. Okay,
Yeah.
now what you have to think about, though, is that, okay, yeah, you could offer $400,000, right? But the house needs to appraise for what we're under contract for.
Yep.
Okay, so number one, I had to have that conversation with my clients, and I'm like, listen, we need to make sure that we're clear on what's going to happen if this does not appraise, right? So I talked to the listing agent with the builder, they're a family builder, and I'm like, listen, I don't want, like, we there might be a shortfall if this house doesn't appraise for the 310, right?
Yeah.
So then what, right? Of course, this is all speculation because we won't know until it's
We don't
appraised,
know.
right?
Yep.
And then he was like, listen, I'm not gonna let a deal fall. Like, we'll handle it, right? So
No.
that's definitely okay. I got my clients, right? We're good, whether it comes in at appraised value or it doesn't, because we're still gonna get to that closing table, because we're
Yeah.
still gonna have that assistance. Now, another thing is that you want to make sure, and this is, Jocelyn was my go-to yesterday, because they had a specific, like, builders, sometimes builders use their own contracts. The bigger builders have their own contracts, right? But the smaller builders in Ocala, you can use the regular as is contract that we use
Okay.
here in Florida. But sometimes there's addendum, so your agent, you definitely want to make sure that your agent knows those addendums and read them, right? So I reached out to Jocelyn yesterday. I was like, because in the addendum it said that the buyer was to pay the title owner policy, and I'm like, oh my goodness, okay, that's adding to closing costs now,
Yep.
right? So Jocelyn pulled up another like a recent closing statement just to kind of see what that number was, right? And so she was able to tell me, maybe approximately $1,600 extra, right?
Yep.
So I went to my buyers and I'm like, listen, this is what it is. You would have to pay an additional approximately $1,600. They were like, I'm good. Like,
Okay.
we're okay, right? But the
Yep.
last thing you want, or we want, is my buyers not to know that, and they're like, wait, where does extra money come from, right?
Right. Mm-hmm.
So you have
Yeah.
to be as transparent as you possibly can, know all the information, and then kind of like, it's kind of like dodging bullets before they even are coming for you, right?
Yeah, no, I 100% agree. And like ultimately, I think that it's so important working with someone like you just said, that was educated and read that addendum. How many agents could have gotten it, said sign this, and never even looked it over for their client? They could have said, like, if you're working with an agent that's just trying to make a buck and doesn't actually care and doing this for a career and for the love and passion of it and knows everything, they could have easily skipped over that. And then her closing costs would have been $1,600 more than what we have predicted, but by just making sure that you read through that addendum and then disclose it to the client so there would be no surprises, right? And 3 months from now, we weren't going to say, oh, your closing costs are this. She's going to know up front. And that's so important. It's so important. The attention to detail in this process is so huge. And it's so important who you're working with, like you said, because easily little things can get missed or not disclosed. But if you're working with transparent people that are doing the right things up front, then it's going to be smooth, easy, and it's going to be fun.
Yeah, and then I have to thank you because we also have another transaction that with one of my other clients, and my poor client, she's like on
Yeah.
her third buyer for her condo in Connecticut, right? And Jocelyn is like, okay, let's just kind of talking with the other agent to kind of see like what do we need to do? Like, can let me give my expertise because it had to do with the buyer had her buyer ended up having to switch from a conventional loan to an FHA loan, and she lives in a condo, right? So there's a
Right.
whole that's a whole I feel like that's a whole nother like can of worms,
We
right?
have a whole hour on condos alone, girl.
Yes. So Jocelyn was like, okay, A, B, C, and D to the realtor. Like we need to look for this, and that, right? And then
Yeah.
that's why I feel like it's so important who you partner with, right? Because where our end goal is to get you guys to the closing table so that you can, like I say, evolve in real estate, get those keys, and invite me for dinner. Don't forget it,
Yeah.
right?
Okay.
But yeah, so I think that's why it's so important to who you're working with, that knowledge, because it does come in handy, right? So
It
but I
does.
thank you so much. We've been on here for an hour just chopping it up about, the lending side of things. You guys know that I'm always trying to provide as much value as I possibly can so that you guys are educated, right? I always want to make sure that you guys are making an educated decision. And like I said, you don't get ready at game time, you get ready way ahead of time, off season, right? So Jocelyn is definitely a go-to person. I put the link in the comments. If you're ready to have that conversation with her, just fill out your information and then she'll definitely reach out.
Yeah,
Any
love
like
to help.
any kind of like what like aha that you like, okay, right before I go, let me just tell you this.
I like what you said. I think the thing is, you don't know what you don't know, especially, and if I don't know anything there is to know about electricity, like electrician, right? I call an electrician if something isn't working, and they come out and they do their thing and they fix it, and then you pay them for their services, and your things are working, right? It's the same thing. I think home buying. You hear rumors, right? You hear this and that, you hear this and that. No, just pick up the phone and come call me, talk to me, because what you heard, the guide, the offer letter, right? You don't have to be on the job. We can do this other ways, right?
I'm so glad
So
she wrote that for us so that
yeah,
you can just kind of be like, no, that's not in true.
that's
And
not it at
entirely,
all.
right?
Right, exactly.
I
And
love
so I think like ultimately, we our passion in this industry is just working, educating, finding resources and making it happen. And maybe you need more than a month to get prepared to buy a home, and that's okay. So I think don't be scared to pick up the phone and start the conversation. That's what I would say. Start the conversation now because real estate will change your life. It will literally change your life from a wealth standpoint, from every piece of it. It's life changing, and so make the move now. Don't wait.
I agree. And then, guys, again, if you have any other questions, you can talk to her directly. I put that link in there. Jocelyn, thank you so
Thank
much for
you for
just
having
being on
me.
here. Absolutely. I hope you have a great rest of your Sunday.
All right, you guys too. Bye.
All right, guys, what did you think? Did you think that that was very educational? Let me know. I have goosebumps right now. I feel so happy. Like look, my pelitos are standing up right now. I absolutely love what I do. I absolutely love you guys. I want to provide as much value as I possibly can. I think I want to start maybe bringing in an inspector, right? One of the inspectors that we normally use, well, we recommend to our clients and they normally use, right? I think that would be great. What else? Maybe a homeowner's insurance agent, just to kind of, see where things are at, and just adding massive value, right? You guys know that I got y'all, right? I hope you guys had a great week. We had a great week. The kids are starting school on Monday. I can't wait. Oh my goodness, I'm so excited. My big baby is going to high school. I don't know when that happens. But we have some really good things coming up. We have two videos this Monday and Tuesday. Monday is going to be in Auburndale again, at Water Ridge. Really nice house, 3-bedroom custom home, 3-bathroom. All the 3.5 bathrooms. All of the bedrooms has their own bathroom, walk-in closet. So I definitely want you guys to check that out. Tuesday we were in Denellen, 1.2 acres, very, very flat land. Oh my goodness, when you guys check that out, definitely let me know. Next week, we're already just actually recorded it yesterday. We recorded a video in Marion Oaks, Ocala. Very, very, very nice home. That, like, these huge ceramic white tiles, the shiny ones that you guys like, for $299,000. So that's going to be next week. Guys, we have a lot of things happening. I really, really love y'all. We're trying to get to 10,000 subscribers by October. Let me see where our count is right now. Our count is 7,464. So definitely, you know, like I always say, like, comment, subscribe. It goes a long way on all the videos, because then YouTube with this algorithm starts pushing it out and things like that, right? We're trying to help as many people as we can evolve in real estate. We hopefully we're gonna roll out the Sunshine State Living, where it's just the kind of like that lifestyle YouTube channel, basically showing you all the little things that you can do in Ocala. We already did some of the few lifestyle videos already. I think that's about it. It's already 6:35. The kids are going to school tomorrow. I'm super excited. I'm excited. I'm excited. Guys, again, I like, for real, I love y'all. Like, I feel like whenever it comes to YouTube and you guys, it's just like I want to do my absolute best I can, right? I really, 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 really do enjoy what I do, and to provide as much value. Guys, don't forget, I'm putting this in all of my videos going forward, is that we have that buyer broker agreement. It is mandated on August 17th, but I've been doing it way ahead of time, as far as like, you have to be committed that you want to work with me, and you have to sign that document. Okay, so even at August 17th and after, if you want to see a house, you're gonna have to sign with someone, right? Might as well be someone you definitely, you know, like, and trust, right? And who got your back. So just keep that in mind when you call me. Know that I will be requiring the buyer broker agreement to be signed. Okay, if you have any more questions on that, please feel free to reach out to me, guys. I absolutely love y'all. If y'all have any questions, please comment, text me, email me, call me. Yeah, know I got y'all. Okay, so have a great rest of your Sunday. If the kids are going back to school on Monday, may they be protected and have an amazing first day of school. And till next week, guys.